Happy New Year, everyone. This is Devins Financial Weekly Stock Analysis Newsletter. Today is January 2nd, 2017. Our newsletter is for your informational purpose only. We're not responsible for your gains and losses. Let's take a look at current market trend and our strategy. Your stock market is still in a confirmed uptrend. However, it looks like between the Christmas and New Year, based on statistics, and market usually made a small peak. And so based on that, I sold out some of the long position last week. I still long the market with the strong stocks and ETFs, but I took the profit, took partial profit. I just long the market with the half positions. Let's take a look at the indices and the charts. German DAX index, very nice uptrend. Right now it's consolidating. US NASDAQ on Friday, it fell below the major averages and the 10, 20, and 30-day moving average. So it looks like it fell below this little flat base here. And it's likely after New Year market may sell off. Surely, we don't know what the New Year will bring. Usually, a lot of times New Year a turning point. But there are also times it will continue with the previous uptrend. So we don't know for sure. But just to be cautious, and we sold half of the position, and the remaining half, we just have a stop order. Let the stop order take care of the stocks. So market has distribution last week for 3 days. Well, actually 2 days. And Wednesday and Friday, market sold off. SP 500 is the same, has a distribution on Friday and Wednesday. Market sold off a little bit, but the overall trend is still up. Gold still in a very deep downtrend and rebound a little bit on Thursday, but Friday sold off again. Silver, downtrend. Gold mining stock, downtrend. Thursday, it rebounded near 50-day moving average, and Friday sold off, so is possibility will favor it continue go down. Crude oil right now seems to be in a little uptrend here, but again, it's near the previous resistance 54. So if the crude oil can break above 55, that would be another uptrend. If not, we should see where it wants to go next. Crude oil ETF is the same. An energy stock ETF, it's in a nice uptrend. However, last week it also broke down from the little flat base together with the major indices. So right now it's consolidating, and we don't know, it could go back up or go down. China Asian market broke down 50-day moving average. Right now it's leaving below 50-day moving average for many days. So the trend is down. China ETF rebounding, FXI rebounding, but below 50-day moving average. The trend is going down. US biotech, downtrend. Real estate, US real estate, this is interesting. Real estate right now has break above 50-day moving average, but gets stuck below 200-day moving average. So if real estate started climbing above 200-day moving average, especially if the 50-day moving average cross above 200-day moving average, then we have a golden cross. It's like here. When you have 50-day cross above 200-day, then the midterm started going up. So for now, we might be for real estate stocks, we might be in a transition from a previous downtrend to the uptrend. So that remains to be seen. Airline, looks like it's doing the opposite. It has a look of transition from the uptrend to the downtrend. So it's broke the 20-day moving average, which is the first time since this uptrend. We have to be very cautious with the airline stocks. Copper is coming down. So it has a sharp rise, but it came down again. Social media network, this has no sign of reversing the downtrend. So it's still in a downtrend, social media network. Same with the solar stock downtrend. Utility, well, utility stood above 200-day moving average. It may reverse the downtrend. Let's wait until the 50-day moving average cross above 200-day. And this is all these are the leveraged ETF. We don't have to look at it because we just look at the general market. The general market is not doing so great right now for the short term. Long term and mid term are still in the uptrend, but for short term traders, we should take profit. So I'm not gonna look at a leverage ETF because leverage ETF is for short term traders. So I'm already got out all my leverage ETFs, so I won't look at it. Anyhow, look at the stocks. There are three lists of the stocks, and let's take a look. The first list of stocks are the stocks in still in the buy range, so-called buy range. We look at the stock that's making a base, and then the moment it broke out from that base, like this Broadcom, Avigo, and when they broke out from that base 178 here, that's a breakout pivotal point. The reason why it has a 2 breakout pivotal point is because we're looking at the previous highs, and this is a one high point, and then there's another high point here. Oh, I see. There also is a gap up, so you can only use the gap up day's open price to be your purchasing price. And if that's a pivotal point, which is also a purchasing price, 5% above that pivotal point would be the buy range. Anything above 5% of the pivotal point is out of the buy range. So the first list of the stocks are still within the buy range. Broadcom is the one within the buy range, and Burlington Store is within the buy range. This one broke out here. I'm putting the pivotal point here, and then, sorry, this one has another pivotal point. So right now, Burlington Store is making another base after a gap up. So once it break above $91.77, that's another buy point. Saojin is also within the buy point, within the buy range. Jack in the Box within the buy range. Jack in the Box looks like it's making another flat base here. MLM within the buy range. Netflix also within the buy range. We should wait for it to break out from a 129.39 cents here. Okay, that first list are the stocks that's within the buy range. Now, the second list are the stocks that's out of the buy range. AMD is a stock that's out of the buy range. Excuse me. And this stock has been very strong, and right now it's too high. In fact, it also shows a few distribution days. So the big money looks like is in the mood of taking profit. So is NVIDIA. It's rise up and come down. So the high volume of profit taking, that's a big money. So NVIDIA in short term is in a profit taking mood. And don't buy it. Wait until it finished the correction or came down near the major average. So NVIDIA, every time it came to the 50-day, near the 50-day moving average, and seems rebound. Once it rebound from that 50-day moving average, that's the time we buy. So we just wait for opportunity. Now, third list are the stocks that's, some of them already broke out, some of them haven't. Applied Materials, $31 right here. This is a breakout. Applied Material already broke out, but the uptrend is very choppy. It came up and came down, came up and came down. So right now it's actually within the buy range if you look at this breakout. Goldman Sachs is making a little flat base here. The pivotal point is $245.67. Is 10 cents above this high point. So once it break out from that little point, that's another buy opportunity. KLA 10 core. This one is making a flat base right here. This is if it break out from this high, $83.23, 10 cents above that high, that's a pivotal point. NTRS, this is another financial stock. Breakout pivotal point is $91.06. It's 10 cents above this high. And Dave and Buster Entertainment, breakout pivotal point is $58.10 right here. It has a previous cup base and gap up, and now it's making a little flat base here. VMC is also making a base here. If it can break out from this high, then it may have another uptrend. So all these stocks which hasn't break out from this recent flat base yet, don't hurry to buy them. We just wait until it break out, because for stocks who did not break out, the chances are they're gonna just fall. So we just wait for the signal. Okay, those are the stocks. Oh, make sure the VEEV, this is a previous stocks, and now it's been sold, so I got rid of that. What to do for the long term? We can continue long the stocks and the ETFs. For short term, we should take some partial profit, wait for the market next move, and before we get back in. If market after New Year, market can sustain the sell-off, can continue go up, then we buy. If the market just came down rapidly, then we should wait until the finish correction. So that's the idea. Okay, that's all for this week. See you next week.